The smell of money. Today I'm putting my own investing. Today I'm putting my own investing habits under the microscope. Are they actually helping me build wealth or quietly keeping me broke? Because let's be honest, we all think we're making smart money moves. But what if the very habits that feel productive are the ones holding us back? Over the next few minutes, I'm going to open up my own investment playbook, the wins, the fails, and the patterns I didn't even realize were sabotaging me. And by the end of this video, I want you to be able to look at your own habits and say, okay, now I know exactly what to change. Are your investing habits helping you or hurting you? We all want financial freedom, but the journey there isn't just about how much you make. It's about how you behave with what you make. I've spent years learning about money, building my portfolio, and trying to invest the right way. But recently, I noticed something weird. Even though I was doing all the right things, tracking, diversifying, saving, I wasn't seeing the growth I expected. So I started digging into my habits, and what I found was pretty humbling. I wasn't losing money because I didn't know enough. I was losing money because I was letting old patterns make my decisions for me. So today, I'm breaking those down one by one and showing you what actually turned things around. Hi, I'm Lisa Drennan, your wealth activator and host of the I Date Money podcast. I help women after divorce rebuild their finances without the overwhelm so that they can find true financial freedom. If you ever felt stuck with your money, like you're doing everything right but not seeing progress, make sure you subscribe. I break down real habits, real numbers, real stories to help you actually change your financial future, not just talk about it. All right, let's get into the truth about bad investing habits and how to finally break them. Let's rewind a few years. I remember the first time I really started investing. I was hyped. I was watching market trends, reading articles, feeling like I was in the game. And then the market dipped. My heart dropped. I panicked, sold off my stocks to cut my losses. And then 2 weeks later, everything bounced back higher than before. That moment hurt. But worse, it repeated over and over. I let emotion call the shots. I let fear take over. When I was scared, I sold. When I was excited, I bought. I thought I was being strategic, but I was just reacting. And if you've ever done the same, that emotional roller coaster, you're not alone. In fact, studies show that retail investors underperform the market by nearly 2 to 3% annually, mainly because of emotional decisions. So today, we're tracking the 4 biggest investing habits that quietly keep people broke and how to replace each one with something smarter. The first habit is emotional trading. This one's brutal because it feels logical in the moment. When the market drops, your brain screams, protect your money! So you sell. But that instinct, that emotional survival response, cost you long-term growth. The fix: automate your investments. Set a reoccurring contribution every month or every pay period and remove your emotions from the process. I switched to automated index investing and the difference was night and day. No more overthinking, no more panic selling, just quiet, steady growth. Here's a pro tip for you. Pair this with journaling your emotions around money, do an aroma reset, and seriously, when you feel that panic, write down what's happening. It builds awareness faster than any book. The second habit is blind investing. This is when you buy into something because someone else said it's a good idea. A few investments are coming to mind. I've done this. Friends, YouTubers, even random Reddit threads. You hear about a stock that's about to explode, and suddenly you're logging into your account. But when you don't understand why something's a good investment, you don't know when to stay or when to exit. If you can't explain an investment in one sentence, you don't understand it well enough to buy it. That simple filter has saved me thousands. Do your own diligence. Read the company's fundamentals. Look at their history. Watch how it fits your long-term goals, not your FOMO. By the way, if you're still watching, you're already ahead of 90% of investors because awareness is the hardest part. The third habit is lack of diversification. Once upon a time, I put 90% of my portfolio into tech. It was booming and I felt like a genius until it wasn't. Then, when that sector crashed, so did my confidence. Diversification isn't just about playing it safe. It's about staying in the game. How to fix this? Spread your money across asset types. You want to have a diversified portfolio. Remember that old saying, we don't put our eggs all in one basket? So maybe purchase some stocks, bonds, ETFs. The general rule of thumb is to take your age minus 100, and that difference should be all stocks, and then diversify it with mutual funds. Think of it like a buffet. No single dish should define your whole meal. That way, even if one plate spills, you're still eating. The fourth habit, no long-term plan. This one hit me the hardest. I was investing without a North Star. No clear goal, no timeline, just vibes and wishful thinking. Without a plan, you end up reacting to every market move. You're constantly checking your portfolio, tweaking things, chasing the next big thing. The fix, set a clear investment goal. Maybe it's financial independence. Maybe it's $100,000 in assets. Maybe it's retiring early. Then reverse engineer your contributions and automate them. Your focus shifts from what's happening in the market to, am I following my process? And here's the kicker. When you focus on the process, the results take care of themselves. If this video hit home, subscribe, tap the bell to be reminded of the next video, and share this with your friends. It helps more people find this kind of real talk about money. And if you want help with investing, let's hop on a 10-minute hot seat call where I will give you one solution to help increase your portfolio. At the end of the day, investing isn't about predicting markets. It's about predicting yourself. When you understand your habits, your fears, your triggers, your impulses, you become unstoppable. So here's your challenge this week. Pick one bad investing habit you noticed in yourself and commit to fixing it, because small changes don't just add up, they compound. Thanks for watching. If you got value from this, be sure to subscribe for more deep dives on money habits, mindset, and long-term wealth. Wealth isn't built in a moment. It's built in your habits. Small habits equals big wealth. And remember, it doesn't matter how much money you have, it's what you do with it.